Welcome to TheoTrade. This is Don Kaufman. It's April 30th, 2018. You are watching the Theo Night video just moments after the closing bell. Once again, people, we're seeing some sell-side activity. The S&P futures closed down today, just about 24, maybe 25 handles. You can see it's still moving here just moments after the cash close. S&Ps, though, seeing some fairly strong selling right into the closing bell. Now, let's talk a bit about the S&Ps and then kind of look forward at the remainder of this week, because this is a week just filled with kind of potholes and news and earnings and data drops. And let's see how the market is anticipating some of that risk. First and foremost, let's discuss levels inside of the S&P futures. You know it, you love it. 2682 on the button, people. That was the absolute high inside of today's trading session. We also came right back to 2682 just after the cash market opened. Now, why do I say you know it, you love it? Because I've been talking about the 2682 level specifically for now what has become months, right? So what you're looking at is, I just switched up the time frame a bit. We are now looking at a 30-day, 1 hour, and you can see we literally flipped back around from our gravity point of 2682. You know, if we continue on this trajectory, we're going to be talking once again, and this level down below that I'm just highlighting right now happens to be none other than 2626. Now, what's going to occur this week, as I said, with some news, some earnings, and some big data drops, is what is going to be needed as a catalyst to drive a tremendous amount of this trade. You know, this is a week that the only way to really describe it, you know, on a week like this, I like to step back from some of the intraday trade. The only way you can describe a week like this, the right word is binary. And what that effectively means, you know, you're a 0 or you're a 1. It effectively means that, you know, this week is kind of a coin flip as to what the markets are not only anticipating, but what they're likely to do. You know, once again, I mentioned this with a number of some of the key earnings announcements we saw, whether it was Google, whether it was Amazon, you know, that came out in the last couple of weeks. But even if you had the earnings in your hand prior to, you wouldn't necessarily be able to justify a trade. Now, before we go any further, and we'll discuss the market as a whole here again momentarily, Apple has their earnings after the bell on Tuesday. So there's a lot of anticipation about this. There's a lot of discussion. Are they going to make their numbers? Is the iPhone 10 going to have sold? Even if it doesn't, they're probably making a small fortune off of it. But the one thing I want to point out specific to Apple is, let's forget everything you think you know about the sales of the company, everything you think you know about, you know, what their earnings announcement is going to be, and just focus on what the market is saying about risk. And quite frankly, I can't get too hopped up, too excited about Apple. You know, the expected move is about $7.80 some odd cents. And that could fluctuate a little bit tomorrow during the trading day. But if you just take that and kind of, you know, divide it into the price over here, what do you get? I don't know. It's about like a 4.7% move. So we're only seeing about a 4.7% move priced into Apple. And why I bring that into scope is, well, earlier today, Apple was already up, you know, over 2.5% at one point this morning. Fine, you know, kind of faded a little bit, but the move that we're anticipating isn't all that dramatic. Now, let's say something spectacular comes out after hours tomorrow. Sure, the underlying could move. You know, the fact of the matter is, though, that Apple, being the largest market cap, is and absolutely does influence the rest of the Nasdaq. But here is this, again, this big breakdown as we're seeing Apple today, not only positive, but positive by the tune of almost 2%, and yet broader weakness kind of, you know, gripping hold in the Nasdaq at large. And I wanted to show you this a little bit because there is a defection in the Nasdaq right now that, you know, really when you put it to it, The Nasdaq ended down about 60 today. It's just off about a 1% move. But can you imagine if Apple happened to be either flat or down? The move in the Nasdaq would have been possibly 1.5%, even 2%, because that is how much influence this particular market cap has. To give you an idea of how much influence, if we look at the Qs, right, and not the Qs in terms of the chart, but we're going to look at the Qs, and I just want to give you a quick read. Look at the implied volatility of the 4-day options versus the implied volatility of the 11-day options. You'll actually see implied volatility in the Qs is up about 0.5%. Why? It's because Apple has earnings. Literally, the entire Nasdaq is carrying slightly more volatility this week because Apple has their announcement. And I'm not here to distinctly give you an idea of what that announcement is going to be. But again, the expected move is not all that dramatic, okay? Yet that is one of the pieces of news that kind of looms throughout the course of this week. If you're looking for trade ideas inside of Apple, this comes right back to what we've been discussing kind of week in and week out, all right? And that is one of 4 trades that can be taken. You know, of course, we could place our bullish trade. We could place our bearish trade. We can do neutral long or neutral short. And the neutral long and neutral short, of course, cores right into the expected move. Again, I would not necessarily be building the Apple positions until right before, you know, tomorrow's close. When it comes down to an idea, for example, a bullish trade, all right, we'd be looking at doing something as easy as a 250 wide spread for about $1.25. And again, I'm going to build a handful of trades for Apple. Okay, we'll go over and we'll dump them into the Analyze tab. Here happens to be a bullish trade, 165, 167.5 for about $1.25. Then we'll flip it around for a second. Let's look at the alternative idea. The alternative idea would be a bearish trade. Here is the exact same trade flipped over as a bearish trade. Clearly, you have to pick one or the other. All I'm trying to do, though, is construct the right trade structure, the right trade logic for you for earnings. So this is a 67.5, 65 put spread that I'm buying for, you know, about the same price. We'll put it right at $1.25. Then when it comes to neutral trades, like what can you do in terms of neutral? There's neutral long, there's neutral short. Take the expected move, okay? Sell options outside the expected move. But, okay, I prefer to create a quote-unquote hedged trade. I don't want to sell options naked into an earnings announcement, because I'm going to tell you something. If you do that often enough, you can sell all the options you want. But once in a while, you're going to get, let's call it CMG'd, right? So Chipotle would have absolutely smoked you. Netflix would have torn you apart if you sold options naked around the earnings announcement. So if you're going to go out and you're going to sell some premium, and here we are at like 165, take the expected move, go out $8, go out $10, okay? And I'll tell you what, there's not a tremendous amount of premium, okay, to necessarily even sell here. So this is a $5 wide spread for an 83-cent credit. Now, at the same time as selling, you know, that call spread, I'll turn around and I'll also additionally try to add the put spread to it, okay? Here's a $5 wide spread, $5 wide call spread, $5 wide put spread for about $1.60 credit. Take a look at the Analyze this one. All this happens to be, okay, is an iron condor. It's just a standardized iron condor, okay, kind of centralized around price. So what we have here, again, you know, kind of check off the list. We've got a bullish trade, check. We've got a bearish trade, check. This is our neutral short. What neutral short effectively means is we think we're going to stay inside of a particular range out there. And if you wanted to go neutral long because you think there's going to be a wild move, okay, you can come in here and create an opposite order. What's the opposite order? Well, I can come in here and literally, okay, instead of selling the iron condor, we can effectively buy the iron condor, right? When I say neutral long, that means a big move outside of what was expected. Now, with that, let's move away from Apple, because is Apple going to save the day, or is Apple going to absolutely crush the market? But that's only one of the catalysts that we've got going for us this week. Let's revert back for a moment to the S&Ps, which have already closed down 25 4 handles today. And specifically, I want to go back over to the SPX. Let's just talk about the broader market and the market at large for just a second. And I want you to look at the expected move, which is about $38. Now, the entire week, we were looking at right around a $42 expected move. Well, we've already seen like Monday, and Monday already took us down, what? Almost $22. And yet, we haven't even seen any of the catalysts yet. Some of the catalysts are Apple. On Wednesday, we have the FOMC. On Friday, we have the jobs number. Okay, pick your evil in this week of trade. One of the things, though, that really kind of eludes me, and I don't have an answer for this, to me, the volatility seems inherently low versus the amount of risk that we might be facing. Now, again, nobody seems to think that anything is going to be priced into this Wednesday's FOMC meeting. Why do I say that? Like, look at the implied vol. The implied vol is below 15%. If the marketplace anticipated risk, you'd see it, all right? You'd see it. You would see the Wednesday being above, for instance, the Friday, and we're not seeing that. Not even a glimmer of that kind of risk kind of playing out. In fact, they're pricing more risk into the jobs number right now than they are into the FOMC announcement. Nevertheless, on an intraday basis, I'm going to be getting long gamma. That means I'm going to be buying some options on an intraday basis. Why? Because I expect this week to be wild and woolly. The volatility out there seems rather constrained, almost suppressed, if you will. Once again, I'm not selling options premium in the broader indices. I am going to be a buyer of options premium on an intraday basis, and looking for wild and explosive moves. Again, fast moves outside of what was expected. More to come throughout the course of this week here on TheoTrade. Have a wonderful evening, everybody. Bye-bye.